Ladies and gentlemen, good day and welcome to Bharat Forge Q4 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kalyani. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen, and thank you for joining our Q4 and full year analyst call. As usual, I'll take you through a short commentary and then open up for Q&A. I have with us members of our finance, investor relations, and management teams. So just to sum up the year, I think we had a strong finish to the year. At a standalone level, we witnessed about a 71% growth in revenues, more than doubling of the EBITDA and a 3x jump in PBT. EBITDA margins at 27% despite the inflationary pressures across all cost elements. We have a strong balance sheet with a net debt equity of 0.2. We've won over 1,000 crores of new orders for Bharat Forge India. This is both for Indian and domestic and export markets. We have also won over $150 million of orders for steel and aluminum forgings for U.S. operations, which will be made and supplied in the U.S. To U.S. customers. I'm happy to note and report that we have won our first order for power electronics for automotive application from our EV division, and also high pressure aluminum die cast parts from prestigious OEMs. We've had a 20% EBITDA margin at a consolidated level. We've crossed about a 10,000 crore revenue, and our artillery gun has completed all trials by the user and passed with flying colors. Just to look at the 3 months of the year, we ended again by growing our top line by about 28% to 1675 crores, given by a pickup in both domestic and export markets. EBITDA margin at 25.7%. Are optically depressed due to the pass-through effect of the steel price increase. If that were not there, this would be about 27%. PBT for the quarter was 352 crores, a growth of 40% over quarter 4 of 21. So just to say, at a consolidated level, we expect 2022 to be a stronger year, driven both by top line growth and strong cash flows, wrapping up of our U.S. operations, growth in our aluminum operations in Germany, and significant growth starting to kick in for our industrial vertical. So I will now be happy to take your question and answers.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. My first question is on the order book. In the December quarter, we had called out that the EV order book is around $50 million. So this order that we're talking about on the power electronics side is over and above that. So this is something you've got in the March quarter. Is that correct understanding? And if so, what is the EV order book now out of the 1,000?
This is an increase because this is something which we had done a product development and supplied it to the customer for testing and trial. And this has now been approved and it will go into series production.
Okay. So within the 1,000 crore, what will be our EV order book now?
Sorry?
Within the 1,000 crore number that we've given, what will be our EV sort of percentage for the order book?
I would say probably about 50%. 50% out of this 1,000 crore in India, and all of the German orders are out of the orders in the US for aluminum, 80% are for EV and hybrid.
Yeah, right. Those are, I gather, casting parts that are going into EV cars.
No, forging. Our total EV order book would be well in excess of, I would say, 1,500 crores between forging, casting, and other parts. Between Germany, US, and India.
And what sort of execution timeline should we look at? Like will it be executed over 1 year or over 2 years?
This will ramp up this year and it will be running at full volume. These orders will be running at full volume in 24-25, but by then we anticipate significant more orders.
Yeah. Okay, that's good to know. And just lastly on inflation, in the last call we had specifically called out that inflationary headwinds that European subsidiaries are facing. So from February to now, how have you been your contract discussions with your end unions and been able to pass on those inflationary headwinds?
Hello?
So sorry to interrupt. There seems to be some disturbance in your line.
Very unclear. Sorry, I couldn't hear at all.
Hello?
Hello?
Seems like we lost the connection for the current participant. We move to the next question from the line of Kapil Singh from Nomura. Please go ahead.
Hi, good afternoon, sir. Firstly, I wanted to check what is the total order book that we have. I believe this 1,000 crores is per annum kind of order that we have done, right?
When it fully ramps up, it will be 1,000 crores, yes.
1,000 crores per annum, right? So I wanted to check what is because we will have orders from last year or maybe period before that also which are yet to go into production, right? So I just wanted to check what is the order book which is yet to go into production.
I would say more than 1,000 crores for sure. It would be closer to about 1,400-1,500 crores. 150 million, 126 million. That's 1,000 crores. So previously one order which are also
So this 1,500 crores, roughly around 1,500 crores would be for the Indian operations, right?
Yes. And for the automotive side.
Okay. And for the overseas operations?
Overseas, as we mentioned, right now it's 150 million in the US.
Okay, got it. And sir, could you repeat how much is the EV order book out of this 1,000 crores that you gave?
500 crores and additionally what we have in the US and Germany.
Okay. And so this 500 crores is in which segment? These are casting?
I won't break it down, but it's in the automotive segment, automotive power electronics. I mean, automotive EV.
No, I meant these are like structural parts or.
This is a variety of components. This goes across forging, casting, power and control electronics, etc.
Okay. And so we also announced this maiden order for DC-DC converters from Indian OEM. This is which product category?
This is the power electronics.
No, I meant the final product. Is it a two-wheeler, three-wheeler? What kind of product is it?
So it's a truck and bus application, commercial vehicle.
Okay, understood. And secondly, could you also share the outlook for various markets in terms of market size, particularly the global markets? What do we see in terms of industry size for US Class 8 and also for Europe market for next 1 to 2 years? How much production loss are the OEMs having right now? Some color on that also, please.
So the US and European commercial vehicle market, we see them at least as of now fairly robust for this year and next year. That is the forecast. The order backlogs are quite healthy right now. So most of these guys have slots booked for the next 12 to 15 months as well. So as of today, all of this is fairly robust. As far as the supply chain disruption is concerned, I would say there are normal supply chain disruptions. There is nothing that is a very significant showstopper right now. There is a lot of volatility and there is a lot of, let me say disruptions, if you will, but they are able to manage, and that is still supporting production outflow.
Do they require to raise the production significantly from current levels? It's around 25,000, for example, for US market. Do we need to go much higher than that, or current levels is what that we should expect to sustain?
They have maintained production at a stable level, so they have not. It's fairly stable. You can call that.
You want to take care of that?
Yes. Okay, sir. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much. Amit, my first question is on. Hello.
Yes, sir. Please proceed.
Yeah, great. Yeah, thank you so much for the opportunity. My question is, if you are seeing any increased workflow or new orders coming on account of opportunities that may have arisen from the lack of supply chain in China, or any extra movement that you are seeing in terms of additional export opportunities for your industrial products?
Yeah, so for industrial, I think this is early days, but we are definitely seeing, let's say, a new supply chain demand from India across sectors, and that is, our entire foray into castings, forgings, etc., heavier forgings with the acquisition of the Baroda unit, and then as we complete the acquisition of JS Auto will allow us to cater to a much larger segment of the market and increase those companies' revenues manifold and grow our industrial business as well.
Can you talk about specific industrial products which are being asked?
No, I'm not going to talk about any specific industry because this is competitive information and I don't want to share it.
Understood. Thank you so much.
Across sectors, it will be across sectors.
Okay. And this is new something that you've seen in last 1 year?
Yeah, absolutely.
Okay. Great. That's all from my side. Thank you.
Thank you. The next question is from the line of Amin Pirani from JP Morgan. Please go ahead.
Yes, hi. Thanks for the opportunity. On the industrial business, I think you already answered partly that question. So which are the areas you mentioned which are 100% dependency on import? Is it possible for you to highlight some broad areas where we can have a medium-term opportunity because of the?
It's all in capital goods and replacement of imports. So it's across sectors. It goes across many sectors, but it's largely all in capital goods.
Okay. And on the on the oil and gas side, you mentioned that you expect stable revenues going forward. So right now you are still below the peak that we used to have like 4-5 years ago.
Yes. Yeah. We are at I would say 2/3 of the peak. Yes.
So despite high oil prices, you are not seeing incremental investments going into that area, basically.
There is incremental investment, but what has also happened is asset utilization, asset life cycle has gone up substantially.
Okay. And some time back you had talked about trying to get into new products, in terms of offshore. Is there any development on that?
No, we have developed new products and got new orders also for new products for the fracking sector.
Okay.
They will all start slowly this year and then increase next year.
Okay. And
not offshore.
Okay, not offshore. Okay. All right. Okay, great. Thanks. I'll come back in the queue.
Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
and some very miscellaneous stuff.
Yeah, hi. Thanks for the opportunity. First question on the India CV demand. How do you see the demand for current year, especially, given the inventory in the system is pretty low. So how do you see the...
Quarter one is looking like it's back at peak volumes of 16, 17.
Okay.
Close.
Very close. I mean, quarter one is at about 50,000 numbers. Sorry, 97,000 numbers. 97,000.
And how do you see this sustaining, let's say, over the full year? I mean,
right now everybody's bullish. Right now people are bullish for Q2 also, but I think we have to go quarter at a time.
Yeah, right.
But the outlook is strong because the CV market has been depressed for a very long time.
Right. And we also were gaining, we had new content, supply starting in the BS6 regime. So should we see the full impact or full benefit of that as well, or we should, our revenue growth will be largely linked to the production growth?
Yeah, see, whatever new products we have developed which are for BS6, we have, significant market share, or 100% market share, and those are going well, and that will continue. It will basically be in line with the market demand.
Right. Okay. And also wanted your thoughts on the EBITDA margin. How should we look at the EBITDA margin because commodity costs are increasing, at the same time we'll have operating leverage benefit coming through, and also the various cost reduction measures which we have taken over the last 2 years.
The problem is that one can't comment on what is the cost pressures, etc. right now. And energy cost is also going up, freight cost is going up. So I think on a overall basis, if we are able to maintain at this level 25, between say 20, around 26, 26 and a half, I think it is a pretty good number.
Right. And finally, the question on the India industrial parts, right? Last year we had a one-time revenue from supplies of oxygen cylinders. How do you see the overall full year revenues from industrial division? Should we?
I think our industrial division revenues will be strong this year, and this will be a continuing trend.
Right. So we shouldn't see a major dip from what we did in FY22.
No.
Okay. Thank you.
Thank you. The next question is from the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Thanks. Congrats, sir, for this set of numbers. Couple of things. One, so if I look at your cash flows for last 4 years, you have done consolidated level in excess of 1,000 crore capex, and only FY20 was a free cash flow year. So you have added US capability, Nellore capability in between, revenues back to FY19 levels. So what is the outlook for Concall capex for the coming 2 years?
We paid lots of loans, so no, you are saying we haven't had free cash flow.
Yes, sir.
I couldn't understand what you were saying. It was very garbled and it was very incoherent. So maybe you can just repeat.
So out of last 4 years, sir, we could see a free cash flow only in FY20, and revenue is back to 10,000 crore plus. So how do you see free cash flow generation in coming years, and what should be the Concall capex?
Free cash flow generation even this year, if you account for, if you look at our debt repayment, we have repaid almost 250 crore of debt. Our loan has gone down. So, yes, net of debt, there is, free cash flow is not there, but we have the opportunity to raise more capital and, raise more debt and, finance cash flow, finance our capex. So I'm not concerned about that because our balance sheet is very, very thin. And we expect between 300 to 350 crore capex this year and next year.
At a Concall level, sir, including project growth, maintenance capex?
Except for acquisition.
Okay.
We have announced an acquisition of JS Auto, which when it gets completed, we will have to, pay the money that we will due. But without the acquisition, our consolidated capex will be in the region of about 350 crores this year and next year.
And second question, sir, as you rightly said that US truck, Class 8 truck manufacturing capacity is roughly 25,000 per month, and order books are there giving you visibility of that much production. So how to look at growth for Bharat Forge perspective, like what kind of parts per vehicle addition, new customer addition, amidst a static production outlook per se?
Now there's lots of opportunity because as all the customers are moving towards electric mobility, they are going to de-integrate and de-emphasize in-house manufacturing. So that is a very big opportunity for us, and our teams are already engaged with customers on those matters.
Sure. Okay, thanks.
Thank you. The next question is from the line of Pramod Amte from InCred Capital. Please go ahead.
Yeah, hi, Amit. Two questions. One is with regard to the international aluminum forging. What has been the experience in terms of ramp up? I think this quarterly in the financials you indicate some revenues being booked. Second, are there any advancement of capex for aluminum forging on the international side?
So our aluminum forging ramp up is going as planned. There has been a few months of slowdown because of some of our customers being impacted by Ukraine, etc. So we're using that time to do more product development for future growth. And we have now more business than we have capacity. So we will have to look at setting up additional capacity to take care of that demand.
And when you plan to look into it and announce per se?
We will announce that probably in the next quarter.
Thanks. And second one is with regard to EV components. You have indicated in the presentation some win in the EV component space in the domestic market, if I'm not wrong. How do you see with all these questions being raised about quality and concerns on safety? Do you see an opportunity for a quality player like you to play a bigger role in EV components as compared to currently imported?
Absolutely. You're absolutely right, Pramod, and we definitely do see that opportunity. But, we are also being cautious in, overcommitting on time frame, etc., because we want to be sure that our products all go through the required tests and we are 100% sure that they are going to meet the safety requirements. Because, the vehicle safety depends on all the system safety. And the system here has one externality, which is the charging infrastructure and the voltage and, the current and voltage drops that we face in India. So these are not things that, all over the world people are used to. In India, you have to, be conscious that this is a serious issue and design your product for that.
Okay. But you expect the ultimately OEM to bear it, or you also have a role to play in terms of providing better...
In this product, the customer gives you a specification and the actual design of the product is yours.
Okay. Yeah, that's helpful. Thanks. All the best.
Yeah.
Thank you. The next question is from the line of Raghunandan NL from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity. The first question is on ATAGS. As you said, the Army trials have been successful. So media reports indicate that, the RFQ is expected in June for over 3,000 crore worth of orders. Can you talk about your expectations, opportunity size and capacity for this business?
I'll tell you that, we expect that this whole ordering process should pick up steam and hopefully get completed in this financial year. In terms of capacity, I think in our first year we will have a capacity of about 100 guns, and after that we will have an increase in our capacity to 200 a year.
And what has been the investment, sir?
The investment so far has been about 250 crores. But please remember, this is only the investment for the gun making, the machining, forging, heat treatment, all that was already in place. Steel making, all that was already in place. So we're leveraging the group's capabilities in that.
Sir, on torque motorcycles, can you talk about how has been the initial vehicle demand and the opportunity on the component supplies?
So the vehicle demand has been pretty good. We have closed the order book at 1,000 orders because again, after reading all the issues with safety and fires and explosions and reversals of certain products, we've initiated a full testing regimen, including outside agency, to make sure that our product is completely robust and will not have any of these issues. So, I believe that it is better to take a little time but do it right. And in terms of supply opportunities, we're very clear on what we know, what we will be making and supplying. And our plants are right now under construction.
Thank you, sir. Lastly, sir, on Nellore lightweighting plant, how much was the FY22 revenue and what is the expectation on the production ramp up going forward?
Our revenue in 22 was very small. I would say hardly 20-30 crores. This will be a year of ramp up for us. We have received export orders for some marquee global customers, and I think the real pickup in growth will happen in 24.
So we should be
23 will see growth, but 24 will be the real growth year.
So we should be able to reach that 200 crore kind of a revenue target there. I think,
I think we should be pretty close.
Thank you, sir. Thank you so much. I'll come back in the queue.
Thank you. The next question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity. Amit, my first question is related to exports. You did talk about some order wins and the fact that even now some of the segments are 2/3 of the peak. And even on the export industrial side, if you can just share outlook, given the fact that there is increasing concerns about recession fears in the developed markets. So if you can just provide some context on where do we stand in terms of our order book, what's been the kind of share gain what we are seeing and the incremental order win opportunity. So just to put things in perspective from a 2-year perspective, whether exports can we expect a double-digit growth on a sustainable basis.
Yes, so I'm going to have my colleague Subodh answer that question. He's far more, let's say, active in the market.
So to answer your question, yes, we are expecting growth, whether it is double digits or more or less, that time will tell. But we are definitely working for growth.
Okay, that's very helpful. But if you can just provide some color as to what are the areas where you're seeing some traction, because there are some areas which are not coming back on the expected lines in terms of, say, oil and gas and how is renewable doing. If you can just provide some more color. Yeah, thank you.
Yeah. See, we are targeting growth in all the segments we operate in, which is right from commercial vehicle, automotive, as well as industrial. And we are putting together a strategy which also focuses on development of different products. So even if the market remains stagnant to a certain extent, we see growth opportunities and we are engaged in that process in any case. This includes certain products in the oil and gas side as well.
Sir, yeah. And related to that, with the transition to EVs, there was expectation that on the legacy parts there will be more consolidation of vendors, wherein large OEMs will move their legacy parts vendor supplies to larger consolidated vendors who have larger scale and basically reduce their investments on those parts. So are we seeing anything like that play out on the global side, especially in markets like North America and Europe?
So while we are already seeing RFQs and proposals and discussions around that line, right now everybody has been very caught up in addressing day-to-day opportunities and issues of supply chain stemming from all the macroeconomic and global issues that are happening. So they are started, but they're not picking up pace because People are just worried about maintaining their day-to-day supply chain and running their plants.
Okay. So in a way, is it fair to assume, Amit, that once these things stabilize and probably from FY24 perspective, you should see some of these activities kind of contributing meaningfully on the export side?
So look, we haven't entered into any such agreements or contracts yet. So I don't know if 24 it will happen, but in terms of revenue recognition, but I think directionally there's definitely a path that we are on.
Okay, thanks a lot. A second one is on defense. Understand that availability of proving grounds or the areas where these guns are tested and all, that's been the biggest bottleneck for defense new equipment order trials basically. So is there any change there, or we should expect?
No. That problem was solved during Mr. Parikar's time itself.
Okay.
He was the one who opened up the government test ranges for private players to use.
So
that happened almost 4 years ago.
That's not
before that, we were not able to do testing. Because there are no private testing fields in India.
Okay. And outside of the artillery gun, which is the next big opportunity you're looking forward to, Amit, on the defense side?
Besides the artillery gun, we have vehicle programs and we have multiple artillery guns. Not just this one, and then we also have opportunities to export our products across the world.
Fair enough, sir. Thanks a lot for that, and wish you all the best. Thank you.
Thank you so much.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi. I just want to clarify on this export order of $150 million. You mentioned whether the steel forging would be made in the US?
This is not export order. These are orders received by our subsidiaries in the US for steel and aluminum forging, which will be made in the US and supplied.
Okay, so would we need to put up steel forging capacity there also, or will provide?
Put up forging capacity. We are going to do automation of our forging line and some amount of maintenance capex, which will allow us to debottleneck our facilities and make them more productive.
Okay. Got it. Second question pertains to the European aluminum forging business. So can you talk about what was the utilization for the 30,000 ton capacity which we have in Europe in fourth quarter and for the full year FY22?
I would say our capacity utilization in Europe was about 40%.
For the full year?
Yeah.
Okay. And the ramp-up has been, is it slower than expected just because of the geopolitical issues which the customers are facing, or also there are...
This was planned because we have to develop so many new products that because the product development is happening in Germany for both the US and the German plant. Therefore, we needed one extra year for product development.
Okay. Got it. And talking about the European operations, did we see a material impact of energy cost inflation in fourth quarter? Was that the key reason why our margins excluding excluding US aluminum were down?
We do have some cost recoveries which are still pending, which will happen in the course of the next few months.
Okay. Got it. And coming to the Sanghvi forging operations, so have we seen improvement in utilization for
industrial?
Right, the FIT?
Technologies and solutions.
Yeah. So have we seen any improvement in utilization there?
Yeah, so I think we will increase our sales there by at least 50% this year.
In FY23, we should increase it by 50%. But how did we close FY22?
25-80 crores for the year. Oh, sorry, for 9 months. So close to 100 odd crores kind of run rate.
Right. Got it. And our India operation subsidiary, primarily India subs, have seen losses and they've widened in fourth quarter. So is it largely because of Sanghi forging, or there are pressures in other operations as well?
No losses. It's basically defense and other things. It's basically defense.
Okay.
Defense and EV, where we are investing.
Got it. A few more questions. I'll call back in queue. Bye.
Thanks.
Thank you. The next question is from the line of Mumkesh Mandlesa from Emkay Global. Please go ahead.
Thank you so much for the opportunity, sir. So on the PV segment side, what kind of outperformance do you expect led by the order wins? So what kind of growth is expected for the...
This conferencing system? It's very unclear. I don't know what is happening. Very, very muffled voices are coming. It's very unclear to hear.
Mr. Mandlesa?
Yeah. Can you hear?
Yeah. Can you just maybe put the speakerphone off or something?
Yeah. I'll speak it loudly. Is it fine, sir?
Clear nahi hai yaar. It's not very clear. Thoda dheere boliye aur thoda dheere boliye.
Is it better, sir?
Yeah. Okay.
Yeah. Just on the PV segment, what kind of outperformance you expected over the industry growth based on the orders, sir?
For PV segment, we will have a definite outperformance because we have won lots of business globally. Subodh?
Yeah.
So I think we should be able to grow our PV business even if there is no change in the underlying markets by at least 30% this year.
This is across domestic and overseas?
No, I'm talking about from India.
India.
And of course, in Germany also it will increase because of our aluminum forging business.
Okay. On the second question, sir, on the aerospace railways, what kind of revenues we have seen in FY22 and what is the outlook for FY23, sir?
So aerospace, again, we are seeing, I would say, between 30 and 40% growth this year and possibly 25-30% growth year after next. Railways, there is not much growth because of the whole electrification and the lack of diesel business.
And so, just on the Kalyani M4 order, has that order started, sir?
Yeah.
So what kind of revenue was this quarter, sir?
I think it was about 20-25 crores this quarter.
Thank you so much, sir.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Gunjan Prithani from Bank of America. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. I just had 2 follow-ups. Firstly, on the India industrial business.
This call is coming in very clear. I don't know what is the difference between one line versus the other. So, I can hear completely what you're saying. So sorry, can you just start again, ma'am?
Okay. So, just follow-ups on your India industrial business. Now, if you can share some color on the various segments, I mean, little bit of the mix, where is it coming from, agri, aerospace, construction, the way you spell it out for FY22. And, when you're giving your comments, clearly there's a lot of confidence on the growth from this segment. So, which are the categories where you're seeing, growth?
I mentioned earlier, this is comparative information and I don't want to share it anymore. Because, there are lots of people who listen to what we say and, I don't want to create a competition for myself. So, let's just say that we're going to grow this business. We have a good strategy. We have a new person who is heading this business in our company and we have a very good plan.
Okay, no worries. Only on JS Autocast now, if you can just give the timeline for the closure and what is the kind of...
It will happen this quarter.
It will happen?
This quarter.
Okay, and anything that you want to give us a sense that how that business should scale up in terms of revenues, the way you put it for the Sanghi?
The way I see it is, when we buy it, it will be at about 380-390 crores or so in top line. Our goal is that in 5 years, we should be able to triple it.
And how much investment for that?
I will talk about that later. You asked me the revenue, I've given you the revenue target in terms of my own business.
Okay, got it. Just the last bit from my side, I mean, on the US Class 8 trucks, now clearly the order, the orders have been seeing significant decline, and that I understand is because of the slots being closed. But are you sensing any increase in the cancellation or any change in outlook, going by some of the other indicators, that you see in the industry?
Not for the moment.
Okay, so you expect that it stays stable at least for next 12-15 months?
Correct. That is the expectation for now.
Okay, got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Aniket Matre from HDFC Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, would you be able to share the Sanghvi Forgings EBITDA, please?
What is the name? One to smaller number. It's about 55 crore of top line and an 70 crore top line. And an EBITDA of about, this is the first year, of about 15-16%. But this is the first year, so I don't think, I don't think we'll be able to look at those. The fact is, we didn't lose any money. We made a PBT and an EBITDA profit.
Yeah, sure. No, I mean, frankly, the reason for asking the question was to just decipher between, we understand Sanghvi Forgings is a very profitable entity, but we still see losses in the India subs. So just trying to understand.
This is nothing. This is the subs are, which are losing money are in defense and EV. And also, what we only have cost. When you go and do trials, there's a huge cost.
Yeah, of course.
What had happened is we had taken over Sanghvi from the 1st of July.
Correct.
So in the first quarter, it's still under NCLT, and there were certain write-offs. So I think the point that you need to look at is, since we have taken over, there are no losses, and we are poised for some very strong growth there.
And, sure, understood, sir. And when you talk about 50% growth in FY23 for Sanghvi Forgings, you're talking about an annualized run rate or from FY22, the 9-month level?
Annualized run rate.
Got it. And sir, just one clarification. This Kalyani M4 order and the ATAGS order, that will come under the India subs, right?
Yeah, it's in India, yes.
No, India subsidiaries, not in the standalone.
No, that comes in standalone.
Okay, both will come in standalone.
When we had bid for those orders, we didn't have KSSL, so the orders were bid and won in BSF.
Sure. One other clarification, you just talked about a very strong 30% growth in the PV business. That was for PV exports, right?
Yes. But even on PV domestic and PV overall, we will have a strong growth because of lots of new order wins from new customers.
Sure, understood. And just one final thing, you said CV domestic is OEMs are talking about very strong growth. Would we go back to the FY19 peak this year in your view, or as per customers, what is the indication?
Q1 is tracking at close to peak numbers.
Okay.
So if it sustains, then yes, the answer is yes.
Great, sir. Thank you and all the best. Thanks for the opportunity.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi. So for FY22 of this 71% growth, how much can you attribute it to the RM cost pass-through and how much is organic?
RM cost, how much is it? We know what, I would suggest just talk to our finance team, they will come back to you on that.
Sure. Secondly, we had seen in fourth quarter particularly, there is substantial increase in other income and interest costs. So is there any change in accounting which has happened, which will continue?
Explain, no? No, we have some disposal of assets.
Okay, and on the interest cost?
It's actual cash received.
Okay, and interest cost also has gone up quite materially to 40 crores.
The portion of the exchange, part of exchange loss because of the rupee depreciation.
Okay. Got it. And most
for interest cost is 20 crores a quarter. I think that's the way to look at it. Yeah. And everything else typically comes from the exchange side.
Got it. And what was USD INR realization for the quarter?
76.
76. Got it. And last question on our working capital. So in FY22, on the standalone basis, we have seen roughly about 1,000 crore of outflow. So do you expect this to reverse, or is this the normal course of business?
So I just have one request. This is Amit Kalyani. I have to unfortunately head out. I have a flight to visit a customer. So I have to leave. If anybody has any last question for me, I will take that. Otherwise, our finance team will continue and our business team will continue with you. So I'll just like to thank you all for your participation and your interest in our company and your encouragement and questions. Please do keep in touch, and we will keep updating you on matters of importance with regard to investor relations and what communication in terms of new things at the company. And I wish you all good health, and I leave you to our team here. Thank you very much. Yeah, go ahead, Dinesh. You had some questions.
It was on the working capital side. So FY22, we had seen outflow of close to 1,000 crore on standalone basis. Do you expect this to reverse partly, or there's no abnormality over here?
So the increase in the absolute number is on the basis of the volume. If you compare it to the sales percentage to the sales, it's a kind of a flat LWC. It's a volume in terms of absolute number.
Yeah, sales year on year have grown by almost 70%. Yeah. And the increase in working capital is a reflection of that.
Got it. Thanks. I'm done. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. On behalf of Bharat Forge, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.
Thank you. Bye.